The housing market isn't a house of cards teetering on the edge. It's more like a locked safe. You can rattle it all you want, but unless the right combination hits, nothing's moving. Right now, only one of three conditions for a true market drop is in place. So why do so many people feel like prices are about to collapse? Because intuition headlines are loud, but real shifts, those are driven by data. Hi, it's Christopher and Broox Mahr with MMG Real Estate Advisors with your housing market update for August 2025. Now, let's break it down. The three signs of a market crash. Only one is here. There are three conditions that must all be present for home prices to plunge. Number one, oversupply. Number two, distressed sales. And number three, weak buyer demand. Right now, only demand is weak, and it's been that way since 2022 when rates jumped above 6%. Current pending sales sit at 1,604, which is up 5% from last year, but still 64% lower than pre-COVID averages. But here's what we don't have: oversupply. Not even close. OC inventory is at 5,071 homes, up 48% from last year, but still 67% below 2006 and 2007 levels with the market crash. Distressed sales, practically non-existent. In June, only 2 homes out of 1,828 closed sales were foreclosures or short sales. That's 0.11% compared to 33+% during the crash years. In short, we've got a slowdown, but not a breakdown. Inventory might be peaking, but not crashing. Inventory rose by just 21 homes in the past 2 weeks, flatlining at 5,071. This may mark our seasonal peak, and while we've seen prices slightly dip month to month, that's normal when more listings hit and buyer urgency fades. But today's sellers are not desperate. Many are holding on to homes with low fixed rate mortgages or waiting for better timing. The have to sell pressure just isn't there. Buyer demand is still muted, but watch rates closely. Demand rose slightly in the past 2 weeks, up 1%. Still, we are far from normal activity. The big wild card is mortgage rates. Rates just dropped from 6.75% to 6.57%, the lowest point since last October after a weak jobs report. If they dip below 6.5% and stay there, demand could bounce and prices could rise again. All eyes are on the inflation data this week, including the CPI, PPI, and retail sales numbers. Those reports could move rates fast. Expected market time still sluggish but stable. With little change in supply or demand, the expected market time barely moved, just down from 95 days. That's slower than last year's 67 days, slower than the pre-COVID average of 78 days, and even slower for detached homes, now at 98 days. This gives buyers more breathing room, but not necessarily big discounts. So how does all this affect the luxury market, and what should all home sellers and buyers take away from this video?
Thanks, Brooks. The luxury market is warming up. In the high-end market above $2.5 million, luxury inventory dropped 3% to 1,201 homes, while demand rose 3% to 171 pending sales. Inventory is tightening, demand is picking up, and thus far in 2025, Wall Street strength is helping support this segment. The expected market time improved to 211 days, its best reading since early June. Now let's break down the price range. $2.5 million to $4 million, 168 days. $4 million to $6 million, 240 days. $6 million plus, 318 days. Even at the top, things are moving just slowly. Now, here are some key takeaways for buyers and sellers. For sellers, pricing is everything. There's more competition this year and buyers have options. But this is not a distressed market. Overprice and you'll sit. Price at a fair market value and you'll sell. And for buyers, don't expect a crash. The prices may soften slightly, but equity-rich sellers and relatively low inventory compared to pre-COVID averages are keeping value sticky. If you see a well-priced home, now is the time to make a move, especially if rates continue to drop further. Bottom line, the market isn't crashing, it's adjusting. Of the three crash signals, only demand is weak. Inventory is healthy, but not excessive. Distressed sales are rare at just 0.1% of sales. Until those other dominoes fall, prices won't plunge. If you're thinking about buying or selling, it's all about timing, strategy, and staying ahead of the data. Let's talk about what that looks like for you on your next move. If you found this helpful, like this video and subscribe for more. And if you're thinking about buying or selling in Orange County, reach out. We're here to guide you with facts, not fear. Thanks for watching, and we'll see you on our next video.